This is Hutch, and today I'm going to show you how to do short put ratios on IREN with today's dip. You can see it's been a darling recently for the last 3 months. Last week, not so much. Today, not so much. Long term, this is the weekly chart since it's open, and you can see I've highlighted, even though it's trading at 1766, it's real strong support there at that 16, that old resistance becoming new support. I don't know if it'll get down there, but what's cool about the short put ratio is I'm going to get paid no matter what. I'm putting this trade on for a net credit, and I am committing myself to buy IREN lower, much lower. But if it goes down a little bit, I can profit even more. So let's talk about how this works. Today's late July. It's the Friday of expiration. I forget what the exact date is. We're going to go one Friday out. So you can see IREN's trading at 1764. I'm going to sell, I'm going to buy the 1750 put, which means even though I'm paying 82 cents, so that's $82, what it means is if IREN closes below 1750, this put will be worth something. It has to be below 82 cents for me to be profitable, but that's only if I'm buying in a vacuum, and I'm not going to. What I'm going to do is I'm going to sell 2 of these bad boys. So it's not showing the exact math here. If I just sell one, I'm going to collect 55 cents against the 82 cents I'm paying for that insurance from 1750. Like if I start to make money, or at least the put itself starts to accrue equity as it goes below 1750. But I'm going to commit myself to buy at 1755. Now these two will cancel each other out, and I still have to pay for the insurance, which I don't like to. So what we're going to do is we're going to double my exposure by selling 2 of the 17 puts. You remember that was 55. That gets us to $110 if we just go back. Oh gosh, darn it. If we just go back here, right? I'm collecting now 110 compared to the 82 I'm spending. And you can see the bid ask is, we're going to middle it somewhere. But long story short is I'm going to get paid to put this on. But by doubling it, not only do I collect money, but it does expose me to having to buy 100 shares at 17. Now, you might say, well, wait a second, aren't you committed to buying 200 shares at 17? Yes, I am, except for the fact that I'm long this put. So that cancels out one of them. In fact, I'm going to profit from 1750 to 17. It's only $50. And again, like, you can do as many of the contracts as you want. I'm just explaining one of these. But you can see I'm going to collect 35. They never exactly give you the middle, but I'm going to collect somewhere over between 30 and $35 to put this on. Plus, if it goes down, I can profit another 50, which essentially lowers my cost basis for the 17 put. Even though I have to come out of pocket $1,700, my cost basis is going to be somewhere, like, it'll be, well, we can do the math exactly. Let's do one of these. Let's see if we can get it for 33. So you can see also my max loss, that's if the stock goes to 0, is 1617. It's going to hog 17 of collateral. I have to make sure I have 17 of collateral. I don't have to have cash. It could just be the buying power, the equity of my other positions. But I'm going to collect this $33 now. Let's see if they give it to me. They gave it to me. So I collect $33. Forget the $32.88. I collect $33. Plus, if it goes down, I'm going to make 50, which essentially makes my, if I have to pay $1,700, I'm going to profit 83 back. Well, I already got this $33 is mine to keep. So that brings it down to 16. What is that? 1667 plus another 50 from that one long put I had that cancels out the other short put. So it really brings my net cost to buy IREN down in the low 16s. Why am I blanking on the math? I guess it would be 1667 less 50, $1,617. That's what it would be. Now you can see it shows up now that I'm long this put and I'm short this put. It does hog that 17 of buying power, and so I'm going to show you something you can do. We'll do some more of these. So I'm going to hit that one. I'm going to hit that one. We're going to edit the ratio. And And I'm going to come down here to where puts are really cheap. So this 14, I'm going to buy a put. Like I'm basically I'm going to throw them a bone of like $5 or $6. And the reason why you'll see is in my collateral. Let's adjust the ratio. So we have one, we're long one of these, same as before. We're short two of these. I am buying this just to hedge my buying power, because if we drop even lower, I want to be able to keep doing this. So you can see instead of 30 some dollars, I'm only going to get 29 or 28. Let's see if they will do it for 28. And I'm going to do 4 of these bad boys. So I'm collecting $100. This is $111. This is cold hard cash that's just sitting in my account that I get to keep no matter what, to put this insurance policy on. So I did buy some IREN last week. I bought some in 9s and 10s, but I bought some last week in case we were going to the moon. So this little price insurance also helps, because it may not get all the way down. Oh, actually, let's just do one so you can see the collateral difference. So if I just do one of these, remember before I had to post up 1,700? Well, now I just have to post up 200. So let's go back and let's get 4 of these actually, let's get 5 of these bad boys. And let's see if they give it to me. And I got them. So there you go. There's a short put ratio. Just want to, so now you can see I have 6, 12. So I'm only on the hook for the 12 minus the 6. So I'm on the hook for 600 shares. And I have these stupid little hedge puts down here. I have these stupid little hedge puts down here just to protect my buying power. You can see I'm actually loaded up on these for other weeks. So yesterday I bought 5 of those. I bought 5 of those. A little bit deeper width. So I'm short 10 of these. I'm short 10 of these. So really this one goes with this one. So what it means is my cost basis, even though I'm committed to buy at 17 here, I'm going to profit $100 between here and here, which really means this is how much it costs, less the credit I collected for these. And I forget what it was, but it was comparable to what we did today. Somewhere in that $20 to $30 range. And then I did these here, right? So same story. Even though I'm committed to buying 5, that's 10 minus these 5, so 5 here, my cost is really going to be down here. So there you go. Short put ratios. Hope this helps. Again, you don't have to have the cash in your account, and you're collecting cash. It's cash flow positive. What you need to do is, if you have other IREN stock that's just sitting in your account, you have options, permissions, you have permissions to do spreads, then you can go ahead and you can make these, you're getting paid to make promises. You can make these promises, get paid to make these promises, and with any luck, buy IREN lower. Really the best possible result is it just kind of falls. Let's just do this. It falls to right here, and then you just kind of collect the max insurance to buffer against the loss. Anyway, got to take this call. Hope this helps.